I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market continued to post new all-time highs in the last week as investors look past the current economic malaise, feasting on any piece of negative news as a buying opportunity. December just continued where November left off, and November was the best upside month for the indexes in 33 years, since just after the crash of '87. Monday, the markets were weak early on as the brick and mortar stocks fell really hard, as Black Friday proved that online sales were much stronger than these old companies that you had to go to malls, and that big surge in online sales just shook up investors, and they were selling those stocks, which had pretty good rebounds. But the indexes, with S&Ps down about 40 points early, rebounded as those buyers came in as usual, ending with only a small loss. Tuesday was strong gains as there was good China data, and that led the EU stocks up early on. U.S. stocks followed, and there was also hopes for a fast delivery of the vaccines. So that gave stocks a good lift on Tuesday. Wednesday, ADP private job growth came out way below estimates, and then Fed Williams came out and he said growth is stalling. Beige Book came out and that all agreed because that was weak. But Schumer and Pelosi came out and they said they're agreeing on about a $900 billion COVID relief plan, and that of course helped the markets as what was weak then brought a higher close. Thursday was a really choppy day as COVID-19 cases exploded, record number of cases and deaths, and the ICUs absolutely full. A lot of cities really basically shutting down, putting a lot of warnings out there, stay-at-home warnings out in California. Really a horrible situation, and they can't bring those vaccines too quickly, can they? And the dollar moved sharply down to new lows as the euro is exploding to the upside. And that's based on the fact that investors believe that the ECB is out of policy tools. Well, of course, they've been at negative interest rates, and if they go from minus a tenth to minus a half, that's not going to do anything but kill their banks. So they don't have much more to do there. ECB meeting coming this week, and that could bring them some increase in their QE, but they don't really have a lot more that they can do. And if that's the case, well, the euro is going to be in demand. And that's really what's happened. So that big decline in the dollar is happening based on this strength in the euro currency. Late selling came in on Thursday that erased that upside gains as Pfizer came out and said they may only be able to deliver half the amount of vaccine they originally thought based on supply chain issues. So that brought some selling into the market, but then of course Friday brought the more buying early on. Payroll numbers came out. It was a huge miss. New jobs created were only 242,000 versus an estimate of 470,000, and that's down from 610 in October. So that was a disappointment. Unemployment rate did edge down a little bit to 6.7% as hiring is declining on huge increases in the virus. All of that, of course, doesn't matter as investors look for reasons that things are bad, because that means that we'll get more stimulus and more funny money pushing up indexes and not helping the people that need to get helped. Even this 900 something billion dollar deal they're coming out doesn't really get to the people as well as I think it really should. So when you're bailing out cities versus helping people, you really have to question how money is being spent. But, all of that bad news that came out with payrolls and virus vaccine issues, none of that really matters. The index has hardly flinched as the market moves up here at around lunchtime, with the Dow up about 150 points in a continuation of an extremely strong situation. Our analysis for the stock market really remains the same. Not much likely to change here for the moment. We're expecting a minor dip into December and then higher prices again into late January. I'm going to show you a lot about that in the rest of this show. I'm going to give you a peek of our analysis on Apple. That is in line and kind of guiding the analysis that I have on the indexes for a dip coming here in December and then higher prices again. So I'm going to do some teaching around cycle analysis in Apple. I'm also going to show you gold, which has really been struggling in here, but then had a good rebound this week. And looking at the SPY as we get a look at the next 1 to 3 months for the stock market. But if you want to have a bigger picture for investors or traders, on Thursday I did I think a great video. I show 7 charts in there on the big picture analysis of the stock market. This is for our members, level 2, 3, and 4. And what I show is this period after January going into 2022. And after January, things could really change. And I'm going to show not only 7 key charts, but one of those is a 100-year chart that you have never seen and you really don't want to miss. I'm also in there talking about valuations, of course, and I'm going to show you a couple of charts in there that shows they are just basically at record levels and at levels that really bring some reason for caution. So don't miss that video. Here at midday, the stock market major indexes are gaining about 1 to 2%. The Dow's probably the smallest of those gainers. Russell's still the strongest. Bond market 30-year down about 3.5 points. A huge uptick in 10-year yields, up about 13 basis points on the week. And all of that really kind of in alignment with this anticipation of stronger growth coming out there as interest rates, I think, have a long way to go on the upside. And, you're getting these higher moves up in copper also. And when you see that, that's really about the strength that's anticipated in the market. So yields going up, copper going up, that's all in alignment with this anticipation that investors have that the economy is going to be much better going forward. But if that's really the case, then interest rates are going to be much higher. And if you think back to what happened in 2018 when interest rates were going up, the stock market got whacked. So that's a little hint for some things that I'm going to show you in that video that I did on Thursday. Gold market, big upside gain as the dollar turned very weak. It's really a rebound and getting up into a problem area, I'll show you. $46 gain on the week in the gold market. Silver gains $1.47. Just missing breaking down and moving into a little area where it's, we'll call it safer. And I don't really comment a lot on Bitcoin, but Bitcoin got hammered last week, and then this week on Monday exploded to the upside. A massive gain on Monday of about $2,600 as Guggenheim came out and said they were filing for purchase of about $500 million in Bitcoin. So that hedge fund interested in that, probably only hedge funds that would really be doing any buying in there because it's such a thin market. But that's really a big gain. Bitcoin does close $1,000 off of its high of the week, getting over 20,000, now trading around 19,000. Dollar down 1.2% on the week. That is a big decline as the euro explodes to the upside, almost €2 to the upside on this ECB meeting coming up, and the sense that they have really nothing significant left that they can do. Oil gains about 35 cents on the week, but still make that 5 weeks in a row and a lot of strength that we are seeing there in the oil market. We had, when it was trading down in the 30s, high 30s, we thought it would get up to $45, and it did that easily. Now our projections that we're showing are up near the $48 area in the light crude market. So that market has been very strong, and with the anticipation that demand will be going up based on the improvement in the economy. Got lots to show you, as I said, coming up some great analysis. And right now, I want to remind you that if you go to the askSlim site, just explore that. We have so many things that are going on right now, and I'm going to show you what just moved into beta today. You're not going to believe what kind of things that we have right now. So if you're new, go to that askSlim, become a free member, and then you get a lot of information about us. If you're watching this on YouTube, please do subscribe to the channel. Click that notification bell, and then you'll know when we put things out between what I'm doing and what RV is doing, and some fantastic analysis. You will see a video almost every day from us. Give this video a thumbs up if you do like it. If you don't like it, be polite and tell me exactly why you don't and how you think we could improve. On Twitter, please follow us at askSlim.com. For information on our memberships, questions on any of these huge offerings and education and analysis, you can write to Matt at askSlim.com for that information. So now I want to remind you about our specials that we have going on right now. This is the askSlim Holiday Special, Give the Gift of askSlim. This is for levels 2, 3, and 4. We have special rates now. This is the lowest rates we've ever had, the best deal. 3-month memberships. These are non-recurring. So you're going to give this as a gift. You don't want them to have to worry about recurring. So this is just for 3 months. If they love it or if you love it, then they can resubscribe on their own. So give that gift to someone you know, or to somebody who someone loves trading or investing, or give it to yourself. It's great for first-time members of askSlim, or our members that are free members. You can step up for 3 months and just learn a ton from us. And if you're a level 1 or 2 member, you might decide that you want to upgrade for 3 months and try out what the higher memberships are. And we have a bonus gift for you. That means if you buy any of these, level 2, 3, or 4, we're going to send you back an Amazon gift card. Let me just give you a little look at that, because if you go to askSlim.com and click on that holiday special link, you will see what I'm talking about. So here is that askSlim website right there. You see right up on the top here, holiday specials. I'm going to click on that right there, and it will bring you to our holiday special page. There's the descriptions right over here of gift option 1, gift option 2, and gift option 3, levels 2, 3, and 4. And you can see in there, we're going to send you back a Amazon gift card that you can then just spend on anything you want to, of course, $20, $50, or $100 Amazon gift card. And you can see all of the details of everything that's included in here. So do go to this page at the top of askSlim.com, and you will see all of the information that you need about those specials. So that is a great way for you to tell. Again, click that holiday special at askSlim.com. So a little bit more to tell you in here, and that is that I want to give you an idea about what we do on a weekly basis. This is this last week at askSlim for level 2, 3, and 4. Daily, we bring out the SIR live stream, and that now is available on our new chart streams. I'll tell you more about that later in the show. That's for traders and scalpers. We also have our daily snapshot that comes out with key analysis on the indexes. All of our analysis we share with you with great momentum comparisons. Fantastic, comes out daily on that. Daily trade ideas, which RV does fantastic. I'll show you that in a second. It comes out with charts and videos. Just amazing amount of learning you'll do. Wednesday, I record Future Speak 24 in-depth analysis on 24 different futures contracts. We also have the Future Speak Minutes that comes out, and the SIR Weekly, which is for longer term analysis. Future Speak Minutes gives you the notes on Future Speak and the exact locations where you can click on them, and it takes you right to that analysis on the video. Thursday, big picture analysis I did. We do lots of things on Thursday. We kind of mix it up between RV and I on videos. This week, don't miss that big picture analysis I did. Friday, of course, this Market Week show. On the weekend, you get the Market Week Minutes, which take you right to the different areas of the show, and the ETF report on the weekend comes. And now what's going on is we are bringing out chart streams. I'm going to show you that in just a moment, and you'll be able to take a peek at everything I just told you just by going to the askSlim workbench. So just to give you a little peek of that right now also, that is coming up. Let me just bring this for you right here. So let's just click here. You see where it says My Workbench? I'm going to click on that right there. And that will bring you to the workbench, and look at this. This is just under development. This is under beta. But everything in here that I just told you about is on the list because this is on my workbench, and I can just click on the stars and it'll bring everything in. But I wanted to show you the trade ideas right on here on the left. If you click on that, let's just look at the British pound so you get some idea of the work that RV's doing. Here is the British pound right over here. It brings you our analysis on weekly and daily. And then there is a video right over here that RV does just an amazing job teaching you about the cycle analysis that's on that trade. So you get a good sense right there for that workbench and all the information that you see on there. So I wanted to share that with you where you can see the kind of things that we're doing and how you can access it oh so easily through this. And that workbench is being developed, and you're going to be able to see a ton of things in there. So that's this week at askSlim.com. Most weeks look similar to this. We do mix it up on Thursday a lot with the type of videos that we bring out. And just in a little bit, I'm going to show you what chart streams looks like, and you're going to be blown away by that. So that's it. That's this week at askSlim. All right, so now we're going to start to get into our analysis here. We're going to look at gold for the next 1 to 3 month view. We've been, over the last couple of years, very bullish on gold. We've caught the corrections as the cyclical patterns have been great. And then we caught these big impulses on the upside. And now I'm going to show you this chart right here. And I'm bringing gold just about every week because there's so much interest in it. And there's a few things I want to do. Now, I'm not going to give a lot of description about the cyclical, about cycle analysis. You can learn that by going to askSlim.com to the cycle analysis workshop tab. And under workshops, and you'll see that. We called for this big upside move over here, and then we called for another big upside move over here in this green phase. That did not happen. It broke down. And when it breaks down, it gives us a message of a lot of trouble. This is in line with what we're looking at, inverse to the to a dollar market that we think is going to start to rebound. Starting in the next week or so. The dollar is exceptionally weak, as I said earlier in the show, with the euro currency exceptionally strong. Now I want you to see this is where the momentum turned negative right over here. It turned neutral right here for a little bit and then turned negative again. This breakdown under this key level turns this phase red. And now where we are is at an important level coming up here. So we thought we would get a rebound. We talked about it rebounding up to 1845 or a little bit higher. That actually is labeled wrong, that top one right there. That is approximately 1890 right there. So I'm just going to change that because I can't stand when it's wrong. So we're just going to say 1890. There you go. So 1845 to 1890 is really the area that we would believe that it would be able to rebound into and then move down again. This is what we consider to be a very risky zone. And because of this breakdown, these resistances are sell zones. So 1845, 1890, and then 1923. Over 1923 is the first warning of it really repairing itself, and over the 1967 level would be fully repaired, and it would turn it positive again. But you can see that is a long way. I mean, it has to rally up another $85 to even give us any kind of a warning past that 1923 level, and right now it's moving up into the sell zone with the highest probability that we're going to see failures in here. Right now, the correlations have broken down with the dollar and the gold market, or up until this week. This week, of course, the dollar fell 1.2%, and the gold market rallied up here about $45. So they're back in their inverse correlation after being in sync on the downside for the previous couple of weeks. So we think the dollar is about to bottom and get a rebound, and that's probably going to hurt gold. But that you could be range bound in here for a while. This area of about 1770 up to this area of about 1890. That makes sense to me over the next few weeks. But risks are to the downside. When you get breakdowns like this and in this red zone that we're showing you, then that area of 1845 to 1890 to us is a sell zone, and that would be the area we would want to maintain a negative bias. Or if gold was long in our portfolio, we would wonder about whether or not that was an area we wanted to affect our allocations and lower that risk. So we tried to get up to it in this last week, and we'll see how it acts if we get the rebound in the dollar we're expecting. Right now, the gold market is negative, and if you look at the blue cycle right in here, these are the minor cycles that you can see right there. So that's gold right there. This is GDX right here. This is silver right here. What that points to is this choppy area right in here, and then another serious area for potential decline into the beginning of February. There's another one, this blue one over here, which is also would be negative, moving down into May, and then potentially again into September, October. That does not paint a very good scenario. And as long as we stay underneath these resistance levels and repair levels that we talked about, repair, reevaluation, whatever word you want to use, as long as we're below those levels, then the risk rewards will remain to the downside, and we will be anticipating serious declines. You get a picture here of this big upward trend that we've had in here and the cyclical patterns. Now, when I get into Apple in a moment, I'm going to show you, I'm going to do some teaching around cycle analysis, will help you understand this. This is one of the busiest charts you will ever see, and one of our busiest charts also, because it has the colored phasing in there, that green, yellow, and red blocks that you see. We do that only in a few of our charts now for illustration purposes, for our members really to learn the style. And we have a ton of members that are students of cycle analysis right now, which absolutely thrills me. So do go to askSlim.com, go to under that tab that shows you workshops, and you'll see 2 workshops there, and take a peek at both of them if you want. So that is a look at gold, which in our opinion is pretty risky, with the potential for just a little more on the upside in here right now. And let's just peg what happens in the inverse correlation with the dollar coming up in the next couple of weeks. So that is a look at the gold market. So the next thing we're going to do is I'm going to show you chart streams. This is, well, mind-boggling for me. The development that we have put into this, and our development team, working with Matt and Arvi, has just done some amazing programming in here, where essentially we are creating our own, it's almost like TV, because we have multiple channels now that we can broadcast with all of our own analysis on there. What you're going to be able to see is the askSlim proprietary analysis and indicators. Right now, in the beta version 1, we have 8 live channels. There's much more coming. There's a ton coming in there that we're going to be able to broadcast to you. And then right now, this includes our stock index report live stream for intraday trading of the stock indexes. A lot of you have seen that. The SIR live stream is amazing. Looking at, I'll show you that in a moment, 3 different indexes, intraday patterns. Multiple time frame analysis on these other 7 symbols, SPX, NDX, GDX, I'm sorry, that should be IW, that should be RUT. SPY, we don't have GDX yet. SPY, QQQ, IWM, and GLD. Will bringing more as the weeks go by. There's trading info for short-term traders 1 to 3 weeks, and for near-term traders 1 to 5 days. For those really kind of short swing traders in there, it's help with decisions on your directional bias, help with location and timing of entries, and help with position sizing. And there's a clear glossary and usability guide. Let me show you that very quickly so you can get an idea here as I go back to the askSlim homepage right there. And now what I'm going to do is take you over to our chart streams page. Again, absolutely mind-boggling. When you look at this, it blows me away every time I look at it because we've essentially created our own TV channels. Here is channel 1 right over here for the moment, which is the SIR chart, SIR intraday chart grid. I'm going to click on that for you to see, and what it opens up is essentially a channel that you're going to see, and all I do is activate the channel. And here is the stock index report, SIR live stream right there. This is a live chart right now. It has all of our support, resistance, the yellow acceleration zones, the reversal scout, which gives you a good sense for your directional trade. You can see in there clearly that the Russell was beyond a doubt the absolute strongest index in there for today, and without a doubt the NASDAQ the absolute weakest index in there today. They're both up. Notice how they move through the yellow acceleration zones. Right now NASDAQ is having a problem doing that. And the Russell's moving all the way up into a fib extension zone right up on the top. So this is a look at this great chart for trading in the indexes for day trading. And now you'll see right over here the short-term traders setups right in here, where we'll look at SPX, NASDAQ, RUT, SPY, QQQ, IWM, and GLD. Just unbelievable. Let's look at SPY. I don't want to fill up this whole show with showing you these channels, but this is, again, a live broadcast with all of our analysis on here. What you're looking at is the way to decide what direction you want to be in. So for the short-term traders, we're looking at the middle chart here, the 2 hours, the 60 day. The daily chart here and the weekly chart on the left. The weekly chart, we're only looking at the reversal scout for sizing. But right here you could see where it turned bullish right there. This thing keeps fading in and out because of this mouse. So here's where it turned bullish right here. During this whole time you'd be positive only, long side. Right over here telling you to stay on the long side. The slim ribbon PO giving you these buy or add signals right in here, fantastic in there, and we just show you all kinds of information. And here you have the market condition indicator on the bottom, right over there on the daily chart. You have the the option bias indicator, and the market condition indicator showing you all those positive signals right there and keeping you on the long side in the stock market based on this. Just fantastic information. And again, this is live right now. This is trading and being broadcast from our charts with all our analysis on there. And again, we're going to be bringing you all of this right in here, and then bringing much more as we go forward. This is available for level 3 and 4 only, and here is the usability guide right over here. I can click that and open it up, and it gives you our glossary right over here, and you can click on all of these, and it's going to teach you about all of our proprietary studies and how to put everything together for your trading. Fantastic work that this team has done as we look at the askSlim chart streams. Right here, there is nothing like this. It's live broadcast of our proprietary work in all of these 8 different chart grids, and bringing you a ton more as we move forward. This is available for level 3 and level 4. Level 4 members get the actual charts to load up those grids to load up on their own Thinkorswim platforms, and they'll be able to then work on those, add their own studies, and then just refer to the live chart streams if they want to do so. So just unbelievable. askSlim chart streams beta, and it's starting right now. So if you want to try to get our if you're interested in getting our specials that we're running right now, that would be a good way for you to start, having access to this. And of course, our members, level 3 and 4, have access to chart streams right now. Absolutely incredible. All right. So now I'm going to bring you some analysis in Apple. And what I want to do is a little teaching right now. And I made a point earlier in the show that the Apple analysis is in alignment with what I'm looking for in the stock market, which is a dip coming in December, and then another move to the upside. So I'm going to do this, show you this analysis in Apple, and then we're going to go to the spiders, to the SPY, and look at it there also. So I'm going to move here from the gold market to AAPL. And here you will see an Apple weekly chart. So this is just a chart that shows you our moving averages that we like to use on a weekly chart. This one right over here is the blue one. The slow one is the 34-week moving average. That is often a place that in cyclical movement it's like a magnet. It comes back down to it. When a stock is very, very strong, sometimes it only comes down to the 13-week moving average. And the whole moving average, which is this one right in here, is a very, very good indicator of direction, momentum, and also helps us as a guide for the cyclical rhythm. So when you look at this, you could say, okay, well, I could see it going up and down, but do I really understand money flow looking at this? So what I'm going to do now, I just wanted to show you this chart. I'm going to bring in our weekly analysis. So kind of take a look at what you're seeing right over here. And then all of a sudden, I'm going to bring in money flow rhythms that are just spectacular as far as the information they give you. And also, before I do that, let's just take a look right over here. I want you to note that there's a triangle formation right in here. And triangles are often a consolidation, and you could see the breakout there. Why actually is there a breakout? What made it the risk rewards that it was going to go to the upside? Well, let's take a look here as I switch over to Apple weekly cycle analysis, and you could see that right here. Now on the bottom are the cycle brackets. Those are simply a drawing tool that is a guide to help us. That helps us see where the money flow is and how the money flow breaks down from these big, what we call harmonic families, that is this dominant and minor cycles, and how that changes as far as the flow of money in these smaller patterns. So what we have here is a major low where they both come down to a bottom right over here. This was quite strong, and you can see these upward arrows show you what we call positively configured cycles, whereas each high is higher and each low is higher, and you have that right over here. So you had these cycles bottom right there, as you can see. Let me get a closer look. And the time frame for that bottom was plus or minus 3 bars from the ideal low expected here, and you could see where that low came. You can also see this was swamped. There was almost no decline right there, and then this one right over here was a pretty good decline, and then it comes down and tests it, or not quite, on these lows right here, and then begins to move up. Now you understand both of these cycles pushing up. That's why you had the triangular shape in here destined to break out because of that upward force that was going on, and you can see that right there, and now moving up into these resistance zones. So we have these resistance zones as sell zones right in here. And one of the reasons is because it's much weaker than the market. So somewhere in here between this area of 124 and 130, the stock is likely to reject. And you saw it rejected here from about 125 and then came down again. So we're kind of looking for range-bound trade in here, but potentially getting up to 130. And then in January, getting potentially up here to 136. So for now, this was a sell zone, and we would expect it to have some difficulty in that area. But overall, this trend looks pretty good to me, and though it might struggle a little bit, and you can see this here where it peaks somewhere in January and then comes down into early February, then we'll see how this top really forms in here. Let's look at the daily chart right now and do the same thing, because I want to explain why I think that there's a dip in December and how that is going to align with the stock market. So here you see the Apple daily chart. This has the slim ribbon on it, which is our momentum indicator. And you can see in here in this period where it was building that triangle, it's the slim, when the slim ribbon is laying on top of itself, it is not, there's no momentum. All you're going to get is chop that you see right over here. That's one of the reasons why I think the stock does not have a lot of upside. And then when you look at this 89-day moving average right here, it's getting some support from it, which it really should. So that kind of gives you some sense where the downside would be in here. This now, when you're looking at this, what are the short-term rhythms? How do you define where, when it's going to go up, when it's going to go down? Well, I'm going to bring in the daily right here of the cycle analysis. And now you have it. You can see right in the bottom how it defines each of those rising and declining phases. And now it shows you where these resistances are, where we call that a sell zone. And now if you look here, look at each of these declining phases and how they bring a decline when both of them lines up into what we call a nesting. That's coming right over here. And you can see we expect Apple to be moving down over these next 2 weeks. And in this resistance zone, and then moving up again in towards the end of the year and even into January. So this would be helping the market move down into this buy zone. Why is that a buy zone? Well, it's a buy zone because Apple on the weekly chart right over here is in this upward trend, and it's not likely to get any kind of a breakdown. So then that becomes a buy zone because the dominant is the weekly, and if it pulls down into this expected area below 117.5, that would be the area we would expect it to be moving up again over 125. This explains to you why we not only use the cycle analysis for timing as we do, but also why I believe that it's going to help the market move down in the next couple of weeks, and then the market will be recovering and moving up again. You can see the clarity of the cycle analysis in here in each of those rhythms, and you can see the benefit of the slim ribbon when it's widening or staying wide and moving up. It keeps you in this bullish mode. You can see when you have a cycle that moves down to correct, you go neutral and then positive again. Each of these cycles, 1, 2, 3, 4 of them, gave you higher highs and higher lows. Those are bullishly configured. That is what defines an uptrend. And then when you look over here, all of a sudden it failed lower, and here it's failing lower, and you're building what is an extended triangle over here, and we'll see if it holds that support buy zone and then moves up as expected, or if it would move below this area at 107, that would be a breakdown, and that would be bad news. We don't really expect that. Again, in Apple, the buy zone is in the next couple of weeks under 17.5, outside down to under 114, under 117.5, maybe to 114, and then up again over 125, maybe to 130 as we see this pattern. So a dip in Apple, and then a dip in the a dip in the stock market, we think, during that period. There's your weekly chart right over there with cycle analysis. There's your daily chart right there with very, very clear cycle analysis and levels all marked out that shows you the resistance, the support, the buy zone, and then where we expect in price and time to be able to move to the long side in here again in Apple. Great stuff. Just love that. So that is a look at Apple weekly and daily cycle analysis. Wanted to show you that in some depth because you get a good sense for how we really understand the markets in a very different way. When you learn cycle analysis, you will never look at charts the same, and we say that all the time. So please do go check out our workshop on cycle analysis. All right, so now we're going to look at the stock market for 1 to 3 months. We're going to look at the SPY. And we have upgraded the stock market slightly based on the current translation. I spoke about translation when I looked at Apple. It's essentially how the movement lays out within each cycle pattern. I'm going to move from Apple here to SPY so you get a good idea. So here's the SPY cycle analysis. Again, as I showed last week, let me just move this out to a 10-year. As I showed last week, I showed this great big megaphone top that we believe it's a top and moving up, and we get up today to 369, and you can see the cycle rhythms in here and how each of these cycle patterns bring you declines into these lows right over here. This was 6.7%, 6%, 35% in the COVID crash, 10.8% in this pullback right over here, and each of those yellow areas are where you expect to get pretty good declines as market corrects. We're not really near that yet, but it does begin around late January, beginning of February, for what we think might be the first leg down, as you could see that noted right over there. So let's take a look here at a little closer look, and what we can see is that we're moving up to these fib extension levels right in here. 371, 375 approximately is where we expect it to meet some resistance. And I see this mid-cycle, or this minor cycle decline that's projected right over here. That's in alignment with what I just showed in the Apple analysis, where we expect it to come down for a couple of weeks and then to be moving up again and then get up into these next resistance areas right over there. And then the risks really pick up. I talk about this in the big picture analysis I did last Thursday, so please do watch that video. I show 7 charts and some charts that you've never seen before that I think really speak to trouble that's coming out there in 2021. Nobody wants to believe that because they believe that the Fed and money printing will hold the market up forever. However, I'm going to show you why that's not the case. So this shows you that the pullback in here is likely to be to about 358. That's that support level right over there. That's the intermediate 23.6%. If they sold it really hard, this is 351. I really doubt that. I don't think that there could be that much selling right now based on what we're seeing in a lot of these patterns. So minor pullback, only 358. This is an upgrade on the translation. What's happening is that the peak right over here is getting later in the cycle. The later in the cycle it is, the more brief of a decline and the shallower it is. Here you could see where it rallied up here and then only left a couple of weeks for a decline. It was really fast and then began moving up again. On this minor cycle here, it did the same thing where the spiders moved down from 323 to 295, so that was over 200 and something points in the SPX. This one right over here was from 358 down to about 326, so that was over 300 points in the SPX right there, and that's pretty reasonable to expect to get. Right now we're looking at maybe 110 points in SPX for a pullback over the next couple weeks, and then moving up again. That's really what we're looking at. It's what this analysis says, and you can see in here the consistency of those cycle rhythms that look very, very clear. So that is a look at the stock market, where we are looking for a pullback in the next couple of weeks of really modest 100 points or so in the S&P 500, and then moving up again. That's what we always bring you is the sum of the evidence. When we look at cyclical rhythms, momentum conditions, support resistance levels, those are to us the very, very key ways to identify market movements and understanding market conditions. And in this case, what we've had in here was this upward turn in momentum right over here, and it's been continuing to show you that. If you look right over here where momentum turned up, it was absolutely spectacular. The minor cycle brought you no dip in momentum, and it continued. Here where momentum turned down, it brought you that correction right there, but then resumed right back up. So momentum, really one of the key ways to be successful in the market is really understanding it, and we focus on that, and you can learn all about that by using our chart streams also, which is just starting the beta today. So if you didn't see my demonstration on chart streams, do go back and see what I showed on that earlier in the show, in case you're just watching a clip here or rolled forward to the stock market analysis. That is so much information that I brought in this show. I hope you love seeing everything we're doing in our analysis on gold and on Apple and on the stock market. I want you to remember that we have these holiday specials going on right now where you can give the gift of askSlim. I gave a great introduction to that also earlier in the show. And do go to our site, askSlim.com, explore it, become a free member. Subscribe to this YouTube channel, to our YouTube channel, and click that bell so you get notified. And if you're watching this on YouTube now, be sure to give us a thumbs up. And watch the member videos and the playlists that we have in YouTube also, and a lot of things on our past shows. Follow us on Twitter at askSlim, and any information that you want to get on askSlim, you can write to Matt at askSlim.com, and he is going to give you that information. I want you to be so careful. It is so unbelievably crazy out there. And we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been